For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. Well, Thursday is getting ever closer to Christmas, and you definitely are seeing it in the liquidity in the markets intraday. The thing that has been working out for us over the course of the session in terms of discretionary trading is once again trading from the volatility bands intraday. In the case of KSS, this is Kohl's Corporation, we see we had a 52.41 short sale on this one with a target down at 51.71. That was no problem at all for the stock this morning, but there were additional opportunities to get short around the pivot line, and this, in this case, the yellow line, the yellow pivot is the S2 pivot. And we see that there was a nice range that formed over the course of the morning with a 51.46 low. Well, actually, the low is a little bit below that 51.46, but remember, I like to use just a little bit shy of the absolute extension when I'm setting these targets. Gives you a much better chance of getting filled. And then on the stop loss side, up above 51.91 was the level that we had to use as a stop. That was just a logical place to put it. It had the reward to risk ratio basically even, but we were looking for an extension move to the downside. I'll talk about that in a second. But for now, the way that this one would be set up is an OCO order. Once it gets filled at 51.67, the OCO order goes live. 51.46 is the initial target. 51.91 is the stop loss initially. And then once you get to 51.46, you can change this to a trailing stop. And of course, what's really going to determine here whether it's a capture of this move to the downside or not is whether you set that stop too tight. So the best thing to look at in terms of a trailing stop is this kind of a bar here where we have a high of $51.59, right? So that'd be about a 13-cent trailing stop to prevent you from getting just bumped out of this on random noise, but then also understand that really what you're doing is just ratcheting in a break-even stop essentially, right? Because 51.59, you're only going to wind up with 8 cents of profit if it stops you, but that is definitely better than a poke in the eye, right? So we'll take 8 cents if we can get it. And in this case, by bringing this down to a 13-cent trailing stop, right, that takes you from 46, and it puts your trailing stop up in here at 51.59. And what you see is it just missed trailing you out and then continued moving lower, got you down below the 51.46 line all the way down to 51.28, and then, unfortunately, turned around and trailed you out on your 13-cent trail, and you miss out on this move to the downside. But I guess what's important here is you had another opportunity for a short sale. If it came back up above this 51.46 line, that was a real good place to look for an entry. That didn't happen. You wound up stopping out on a trailing stop. You did manage to capture the move from the yellow pivot down to 51.46 and did 3 cents better for setting the trailing stop. And most importantly, you followed your discipline, and there's no reason to kick yourself for it if you did it this way. But now you know I'm all about plan the trade, trade the plan. And what's really important to me is having an objective way to evaluate whether or not things are going right or wrong. So KSS generated 2 trades from that yellow pivot down to our intraday profit target. It's a nice way to put together a plan on the fly. And as always, I hope you found the video useful. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for Friday. It's the best trader education anywhere, only from traderinsight.com.